Imagine a world where every financial transaction tells a clear story, a story of precision, accountability, and success. Today, we invite you to step into that world and master the art of accounting through the clear and compelling process of ledger posting, trial balance preparation, and financial reporting. In this video, we break down the intricate details behind the general ledger, specialized journals, control accounts, and financial reports, using real-life examples from Timberland Carpentry Pty Ltd to illuminate every step. At the heart of professional accounting is the general ledger. Think of it as a master file that captures every financial move of your organization. After recording a transaction in your journal, the next step is to post it into the general ledger, a comprehensive collection of all your financial transactions that provides a bird's-eye view for management. In our journey together, we begin by exploring how each transaction recorded in the journal is transformed into legible entries in the ledger. The process is both systematic and vital. You must pass the journal entries, ensuring the debit side equals the credit side. Keep the information intact, and then calculate the balancing figure for each account. These steps are essential to prevent errors from creeping into your records. Picture the opening scene, a bustling workshop where every material movement is mirrored by a financial entry. As you watch detailed journal entries turn into neatly organized ledger accounts, you realize the magic of double-entry bookkeeping, a system where every debit is matched by a corresponding credit. The visual aids show columns neatly divided into debits on the left and credits on the right. This graphical representation reassures viewers that every transaction bears a dual nature, ensuring the books remain balanced. As we transition from theory to practice, let's walk through the life of a transaction using our example from Timberland Carpentry. On the first day of business, Carl Phillips contributes a car appraised at $30,000 and stock valued at $6,000 to kickstart his enterprise. This capital contribution is recorded with precision. The details appear in both the general journal and the ledger. Notice how the capital contribution not only registers in the respective car and stock accounts, but later consolidates into a summary entry within the overarching capital account. This dual recording reinforces the integrity of the entire bookkeeping process, ensuring that every cent moves in harmony. Next, we introduce specialized journals. These are the dedicated stations for specific types of transactions. In our journey, the cash receipts journal captures all cash inflows, from capital contributions to daily sales deposits. Visuals show detailed columns for deposit slips, sales receipts, and even interest received. For example, when Carl deposits funds from personal savings into the business account, this action is captured clearly in the cash receipts journal, ensuring a precise reflection of each incoming cash flow. Parallel to this, the cash payments journal handles all outflows, whether it's a purchase of office supplies, material acquisitions, or even petty cash advances for minor expenses. Each transaction is recorded with equal diligence. The viewers see a well-organized layout where the credit to the bank is always accompanied by a corresponding debit entry. These dual columns help maintain the balance, a cornerstone of sound accounting practice, and visually guide the learner through each step. Transitioning further, specialized journals such as the Purchases Journal, Sales Return Journal, and Purchase Return Journal provide additional layers of clarity. These journals detail credit transactions separately, ensuring that accounts payable and receivable are both accurate and complete. For instance, when Timberland Carpentry buys goods on credit, the purchase is recorded in the Purchases Journal and later summarized in the creditor control. Similarly, when goods are returned, whether it is due to unsatisfactory quality or order errors, the corresponding journals capture these reversals accurately. This division of tasks not only clarifies the process, but also makes error detection simpler for the viewer. Every instructional journey encounters challenges. In accounting, these challenges often come as errors. Common mistakes such as mismatched debits and credits, or even overlooked adjustments. However, just as every conflict has a path to resolution, these potential pitfalls become teaching moments. Throughout this video, we highlight how careful checking and methodical cross-references ensure that every error is caught and corrected. Whether it's through the review of individual ledger accounts or the meticulous preparation of a trial balance, the viewer learns that each safeguard is designed to uphold the accuracy of financial records. Now, let us delve into the trial balance, the accountant's final checkpoint. A trial balance is a powerful tool that lists all ending balances in the general ledger accounts at a specific moment in time. Its primary purpose is to verify that the sum of debits equals the sum of credits. As you see animated tables fill in with figures, notice that the total debits and credits both amount to $242,700. This complete equality is not coincidental. It is the result of careful, precise recording and posting from various journals. The trial balance is more than a mere checklist. It is an essential diagnostic tool that helps identify inconsistencies, allowing you to trace back to the source of discrepancies and correct them before financial statements are prepared. After ensuring that the trial balance checks out, we move to the concept of control accounts, a sophisticated yet crucial part of the ledger system. Control accounts serve as summary totals for detailed subsidiary ledgers. By summarizing the detailed activities of accounts receivable and accounts payable, control accounts dramatically simplify the general ledger. Visuals depict a concise snapshot of accumulated amounts, such as the debtors control and creditors control accounts, showing how these figures are supported by subsidiary ledgers that record each individual transaction. For example, in the debtors control account, the sales made on credit, cash receipts, and sales returns are all consolidated. The corresponding subsidiary ledger then provides detailed insights into each customer, such as BM trading or PK trading. This stratification not only reduces clutter in the general ledger, but also allows for easier reconciliations. As you watch detailed graphics illustrate how every summarized figure traces back to individual transactions, you appreciate the layered complexity and high level of control in modern bookkeeping. Let's now explore the essential financial reports that transform accumulated data into actionable business insights. The process culminates in the creation of financial statements, the income statement, the balance sheet, and the cash flow statement. Each of these reports plays an essential role in portraying the financial health of the organization. The income statement, or profit and loss statement, tells the story of a company's performance over a specific period. It begins with a clear listing of revenues, segregates out sales returns to produce net sales, accounts for the cost of goods sold, and finally deducts all operating expenses. In our Timberland Carpentry example, you see how cash sales and credit sales combine to form total sales, which are then adjusted for returns and cost figures to derive a striking gross profit. Every visual in this segment reinforces the transformation of raw numbers into a narrative of profitability. As you follow along, you grasp how the net profit figure, derived after accounting for salaries, utilities, and interest received, provides a clear picture of operational success. Next is the balance sheet, a snapshot of the company's financial position at a specific point in time. This powerful document is divided into assets, liabilities, and equity. Visual learners will notice clear sections. Current assets such as bank balances, debtors, stock, and petty cash, aligned against current liabilities like creditors. Non-current assets, including office supplies and vehicles, are likewise neatly grouped. The balance sheet visually demonstrates the fundamental accounting equation: assets equal liabilities plus equity. You watch as figures like the $214,700 total assets align perfectly with the sum of liabilities and owner's equity. This equilibrium reinforces the concept that the organization is maintained in perfect balance, a key indicator of financial health. The third report, the cash flow statement, shows how changes in the organization's cash position are managed across different activities. You see cash flows segmented into operating, investing, and financing activities. Through detailed arrows and annotated charts, the statement reveals operational cash flow adjustments, from net profit to changes in working capital, such as increases in accounts payable and inventory. This breakdown demystifies the often challenging concept of liquidity management and provides a clear path from raw profit figures to actual cash available at the end of the period. Altogether, these financial reports are not standalone documents. They are interconnected narratives that provide insight into performance, liquidity, and financial stability. The income statement explains profitability. The balance sheet confirms the static financial position, and the cash flow statement reveals the dynamic flow of money. The comprehensive presentation of these reports builds confidence in viewers, transforming complex data into understandable, actionable information. Throughout our exploration, we have also touched upon the meticulous process required to maintain these records accurately. The importance of recording each journal entry precisely, balancing the ledger, and reviewing trial balances ensures that the subsequent financial reporting is free from error. In practice, every step, from posting detailed entries to reconciling the control accounts, strengthens the reliability of the financial statements produced. Understanding these processes empowers accounting students, business professionals, and finance enthusiasts to confidently navigate the often confusing terrain of bookkeeping and financial management. As the video progresses toward its conclusion, we revisit the core themes. The accurate posting of transactions, the disciplined preparation of trial balances, the consolidation of control accounts, and the logical derivation of financial statements together form the backbone of effective accounting management. With every segment, thumbnails of ledger entries, trial balance formats, and financial statement layouts appear on screen, echoing the practical advice provided in our detailed explanation. The harmony between the on-screen visuals and the spoken narrative creates an engaging, comprehensive learning experience that makes even the most complex procedures accessible. In practical terms, mastering these processes means not just achieving compliance with accounting standards, but also building a resilient system that can spot and correct errors before they cascade into larger financial issues. As you learn to navigate through journal entries, ledger postings, trial balances, and financial reports, you build a foundation for better decision-making in business. Each piece of the accounting puzzle, when accurately assembled, reveals the full picture of an organization's financial health. As we conclude this in-depth tutorial, remember that the essence of good accounting is not merely about recording numbers. It is about capturing the financial heartbeat of a business. Every step we covered today, from recording transactions to preparing refined financial reports, is designed to instill confidence and foster financial literacy. Your journey toward mastering these principles is not just about following procedures. It is about understanding the story behind the numbers. Now take a moment to reflect on the process. From the rigorous entry of journal transactions to the precision required in balancing the ledger, and finally, to the clear presentation of financial reports that inform strategic decisions. Each element plays a crucial role in ensuring that every financial statement is a reliable reflection of reality. This systematic approach prevents common accounting errors and solidifies your grasp of the financial narrative. Before we wrap up, remember that the methods discussed today are applicable not only for academic understanding, but also in real-life business environments. Whether you are preparing reports for internal review or compiling data for tax submissions, The clarity and accuracy you achieve through diligent accounting practices are invaluable. As you apply these techniques, visual aids such as formatted journal entries, ledger postings, and summary charts will continue to guide you, reinforcing your learning and ensuring accuracy at every step. In conclusion, this comprehensive guide has taken you on a deep dive into the essential accounting procedures used by businesses like Timberland Carpentry. You have seen how the careful integration of journal entries into a general ledger, the preparation of a meticulous trial balance, the consolidation through control accounts, and the final production of detailed financial reports all intertwine to create a clear, accurate financial picture. Your confidence in managing these processes grows, empowering you to handle even the most complex transactions with clarity and precision. Embrace these techniques, apply them with diligence, and let your understanding of accounting drive better financial decisions. Thank you for joining us on this journey through the world of accounting. Watch the accompanying video and enhance your understanding of bookkeeping, ledger management, and financial reporting.